Go ahead, John.
Yes, as you said, I'm coming from the medical field. Actually, I'm an assistant professor of cardiothoracic surgery, and I'm doing a lot of research. And during the recent years, I'm trying to apply the beauty of golden ratio in medical sciences, and particularly in cardiovascular field. And believe it or not, the heart, the normal human heart, has dimensions that follow the golden ratio.
1.618? 1.618, the heart. Huh?
Exactly.
In what way? The chambers, the size of the heart?
If you divide the line that divides the atria with the ventricles by the line that divides the atrium from the ventricles on a vertical line, then these two lines, the ratio between these two lines follow exactly, in the normal heart, exactly the 1.618 ratio. The same also is true for the arterial blood pressure. And I believe that the normal ratio, if we divide the systolic blood pressure with the diastolic, the best ratio and the most normal is the golden ratio, 1.618. And I'm conducting now a research, and I'm following people that they have the golden ratio in their blood pressure, and I want to see in the long term if they have less cardiovascular problems, comparing with people that they don't follow the golden ratio in their blood pressure.
Okay, so in layman's terms, what would that be, like 110 over 60 or something like that would equate to 1.618?
Yeah, if it is 120, your systolic blood pressure, then your diastolic should be something 75.
Okay.
So this is very close to the golden ratio.
Okay, so now I know I'm probably the copper ratio. Maybe a little, probably off from the gold. So, you know, it's so fascinating how the law of nature and harmonics play out in everything that has been created, including the markets, which are just another form. It's another form of life, isn't it, in a way?
Yes, I totally agree with you, because what is the market? The market is the gathering of the human societies, and also I am influenced by a book. It's called The Wave Principle of Human Social Behavior, by Bob Proctor. Yes, exactly.
Okay.
And this has inspired me to starting following the markets using the Elliott Wave principle.
Okay.
And of course, for the application, I have read the Frost and Proctor Elliott Wave principle book.
Yeah, usually
describes all the rules and the guidelines of the wave principle.
Yeah, see, so usually it happens the other way around. People start with E wave and then they get into harmonics. Harmonics led you to Elliott Wave. So are you finding a lot of high confidence forecasts happening using the combination of Elliott along with the golden ratio?
Yes, because as Ralph Nelson Elliott described in his original work, the Fibonacci, the golden ratio and the Fibonacci ratios is the mathematical tool that governs the wave principle. So if somebody wants to fully have all the advantages of the Elliott wave principle, has to use also the Fibonacci ratios and also the channeling techniques that Ralph Nelson Elliott used in his original work.
Okay. So they say a picture speaks 1,000 words, and I know that it is that way in the medical field with CT scans and imaging. So if you go the upper left hand corner, there's a green box with an arrow.
Okay.
And if you click that, you'll be able to share the charts that you wanted to show us today.
Okay.
Then a desktop will come up, and then you click that and start. And then we can talk about what you're seeing based upon methods you believe in. Okay.
I will present the markets I'm interested in these days.
Okay, so we're going to start with the dollar.
Yeah, I have put everything in order, so we can start.
Okay.
Okay. I hope you can see the dollar index.
We got it.
Okay, so I will start with the dollar index. And back in 2014, you can see we have 1 and 2, and then a very nice third wave upwards, which is a textbook third wave for an Elliott Wave analysis. And then we have this time-consuming consolidation, which is actually a sideways price action. And sideways in Elliott waves, the pattern that most fits to it is a contracting triangle. And in our work, we have been working with this contracting triangle. We believe that wave C of the contracting triangle is in place, and we're expecting now strength in the dollar against the euro, and I show later on. I expect also another 3 waves to complete the pattern, and then a thrust to the upside that will complete the cycle, the 5 waves to the upside, and then contracting.
And where does that come in? 104, 105, 107, and how does 1.618 apply to a final objective? Does it?
Yeah, I will talk about Europe because I have the measurements in Europe, and let me go to the next slide.
Okay.
Okay, so this is the euro-dollar chart. If you flip over, it's almost the same kind of analysis, and we can see that I'm measuring wave A, bottom last year, in March of last year, 2015. And then this large contracting triangle still unfolding.
And is that a 4? So you're viewing the sideways action as a 4 with a 5 to complete?
No, actually in the euro dollar, I'm seeing this as a B. Because you cannot say that this is a 4 because it is the time, it doesn't have the time proportion to be a 4.
It's too long.
So I believe we have already in place 5 waves for wave A. This is a B. This is a contracting triangle B. And then we have a C wave. And the measurement of the triangle will be at the end of the triangle tells me that the price will go below parity. It can be as low as 0.80. But we'll see how the waves unfold after wave E is in place. There's a less possibility that we may have more upside. So if we pass the 117.15, that wave A is the wave A of the triangle, then we have invalidation of this contracting triangle. We may believe now for a complex wave, a W, possibly a WXY, or a flat. I don't believe that a flat, because in a flat wave, you expect that wave C will be very sharp. So
so we could still go to 117, 118, and then fail and go under parity. It's just a question of what. It's just a question of the form, but either outcome, either that we peaked here, we're going under
this
parity,
is not an impulsive move. This consolidation.
If we take out the A high, it's still going to be bearish.
Yes, I will remain bearish. Yes.
Okay, got it.
For the parity. And let me show you the short term. In the short term, I believe we completed a complex zigzag for a Z wave. We have an ABC triangle B. I believe we topped in 114.65. And we have the first small 5 waves to the downside. I expect a little more upside to complete wave 2, and then another the 3, 4, and 5 to complete the A of the zigzag of the D wave.
Down to 110-ish, about a shade under 110.
For one, yes, at about 110 for wave A at about 110.
Then you get a B.
For the C, B will be either 38.2% or 50% or 61.8% golden ratio, and then the C will be at around 107.
Okay.
And this will complete the D wave.
Okay.
And similarly to the euro dollar, if we look at the USD Swiss franc, I'm also working with another contracting triangle. In this case, the big wave exceeds the origin of the pattern, so this is called a running triangle in Elliott Wave. We believe we started, and C wave stopped exactly at 78.6% of wave A. It's a common relationship for a wave in contracting triangles.
Okay.
So I expect to see another 3 waves for wave D, 3 waves for wave E, and then a thrust. And this thrust, if we go to the previous 4th wave, which is a common level for Elliott Wave corrections, it will be at 1.18. This thrust from this large triangle. So similar to the euro.
Right. It's almost the inverse, complete inverse relationship to euro.
Exactly. Yes. Next, I have the USD versus the Japanese yen.
Yeah.
And the pattern I'm working with this pair, I'm seeing 3 waves for wave A, B, C for A. I'm seeing another 3 waves for wave B. And I'm seeing an impulsive decline for a possible wave C. So this is a flat pattern, and I am expecting soon to find a bottom here, and then the market has to decide either go in 3 waves to the upside and then continue lower for a larger correction, or maybe if this is not the W, it is all ABC for correction, we may see new highs. But we have to analyze the new developing waves. I believe it will be 3 waves, and then we'll continue to the downside.
Okay, up towards 116, the breakdown. Back to that.
Yes, and I think this is a structural resistance of the market, this area here, 116, 116.50.
Well, that should probably give us new highs in the S&Ps if the yen's going to rally back there, huh? In stock index.
Exactly. If we have new highs there, probably we'll continue very soon. We'll finish with this downside movement.
Okay, got it. Nice view.
Okay, next, I like this pair. I think the Aussie New Zealand pair, and I'm trading a lot this pair. I believe we had an impulsive wave to the upside to 114 almost, and then all this pattern is a large corrective pattern, and exactly wave 2 finished at the golden ratio of wave 1 at 0.618. And then I'm seeing an impulsive wave developing to the upside. We have waves 1, 2, exactly where you expect to has the Fibonacci ratio. Wave 3, wave 4 also has the expected Fibonacci ratio, and I think we are starting the final 5th wave to the upside. I'm expecting 116 to reach this pair.
Okay, and that'll just be the beginning of. Then we'll have a larger correction.
Yes, and then, this is the beginning. Yeah, this will be 1. Then we have 2, and then go 3, 4, 5 for a larger.
I'm looking for about 124 off a head and shoulders pattern.
Exactly. Yes, I know this pattern. Yeah, I agree with you. I agree. Okay. And the most important is if Elliott Wave agrees with traditional patterns. I think it's more powerful. So this is even better setups for a trade.
Okay, Great presentation so far.
Okay, then I have the Euro pairs, and I'm presenting here the Euro versus Great Britain pound.
Wow, that's a big move. I like this one. Go ahead.
I believe we have three-wave move for wave A, back to the origin of this three-wave for a B wave, and a clearly impulsive wave. I'm not sure if we reach the top in this market.
Yeah.
Probably we reach, but we may have more to go. I think we may reach 0.82, where this wave will be 0.618 of wave A. Actually, this is not one, it is A.
Yeah.
C wave is 2 times the length of wave A, which is normal for a flat pattern. But the confirmation, once we break down this blue channel, I think we'll have the appropriate confirmation to start shorting the market. And once this is a corrective pattern, I am expecting to be more than fully retraced. So I'm expecting to go below the origin of wave of this wave B.
That's a great picture.
You can notice also how nice we have the Fibonacci relationships in this impulsive movement. We have also the guideline of alternation. Wave 2 is a zigzag, wave 4 is a flat. We like to see these guidelines. An Elliott wave count is more correct when you satisfy the most guidelines you can satisfy.
Who is we, John? Do you have multiple personalities? Because I find myself saying that too. When I'm really saying I think, at times I hear myself saying, well, we think, but we is me.
Okay.
Is we just you? But at least I'm a Gemini.
I'm representing my website, www.elliottwavetiger.com. We are 3-4 people. That's why sometimes I'm using we instead of I. That's way.
All right.
Okay, another pair that I am interested in also, and I'm trading a lot, is the EURCAD. And I'm showing here the larger picture, where we have an impulsive wave 1, 2, 3, 4, 5 for wave A back in 2008 to 2012. And then the move to the upside is zigzag moves. We have a W, X, Y, clearly zigzag.
Right.
For B wave, which comes close to 0.786 retracement of this impulsive wave. And you can see the personality of an impulsive wave, starting impulsive wave to the downside. You see how sharp the price is reversed.
Well, that was like the Canadian. The Canadian did that. That's why, and oil bottomed at the same time.
Exactly. That's why I will present now the EURCAD, the USDCAD, and then I'll show my oil charts.
Okay.
And if we go to the shorter time frame, I'm counting wave 1, 2, 3 at exactly golden ratio. Wave 4, nice ending diagonal for C wave of this fourth wave. Very sharp reversal to the downside. Probably we may finish here the impulsive wave, but I'm not sure. I'm working now with 1, 2, 3, 4, 5 to complete this impulse wave, and then this retracement will be an opportunity to short the market, to continue to the downside.
At about the 150 range.
Yes, 150 range will be a great opportunity. It is the previous fourth wave, as Elliott states. So I think it will be an opportunity to short the market. And if we look the same relationships in the USDCAD market, nice impulsive wave to the upside. I believe this is only wave 3. We have 1 blue, 2 blue wave, 3 blue wave. Nice channel containing 1, 2, 3, 4. Nice throw over as Elliott
Yes.
says in
Throwovers make me throw up.
Yes, throw up, and then sharp reversal to the downside.
Right. Okay.
So I believe we are close to find the bottom for this A wave. Wave B will be an opportunity to short the market, going back to previous fourth wave, and then another impulse wave to complete the 5-wave sequence for this movement.
Okay, so that's interesting. That implies maybe another few months of strength in crude oil, and if you're if you say that's a 3 in Canada, and that we're just in a 4, and there's another high, that could mean a retest of the lows in the crude oil, couldn't it?
Yes. So let me show you my crude oil charts. This is the weekly chart. We can see we have 5 waves, very sharp move to the downside for wave A, then 3 waves for wave B, partially retracing this sharp movement, and then we have 1, 2, 3. I'm counting. We have an interim bottom here. I think the next 1 to 2 years will go to this range, previous fourth wave, to complete the fourth wave at around between $50 and $60, and then the final fifth wave to complete this sequence, this blue series of impulsive movement, 1, 2, 3, 4, and 5.
Okay.
And then we should expect that oil will start rising again. And if you go in the shorter time frame, this is the interim bottom in crude oil at around $26. Nice impulsive movement for wave A in this channel. And then I'm counting 3 waves for wave A, 3 waves for wave B, back to the origin of wave A. I think I'm working with a flat pattern. Nice sharp move to the downside with a gap here, pointing for a third wave. So this will be a third wave for 5. And this area is very interesting, 32 area. I think it's a buying opportunity for crude oil.
Okay,
because
so
here,
that's the golden ratio comes in there at $32.
Both for wave C of the flat and both for wave B of this ABC move that I'm expecting. So the larger trend for crude oil has been turned to the upside clearly, I think.
Do you have gold?
Of course. I have also natural gas, and then I have gold and silver. Same to the natural gas market. To finish the energy, we have waves 1, 2, 3. I'm working with a contracting triangle to alternate with this 2 wave, and I'm expecting a thrust, which will be the final movement to the downside. And if we go to the shorter time frame, I'm working with, again, 5 waves for wave A and contracting running triangle for wave B, and this will be the C wave to complete the C of the triangle in this market. So I think we have also potential for higher prices at 223, I believe, where C equals wave A, common relationship.
Thank you.
Let's see gold. I think most people is interested in gold. What I'm seeing in gold, I see we have wave 1 from 2011, we top in gold. We have wave 1, wave 2 at an expected Fibonacci ratio, wave 3 exactly at the golden ratio, contracting triangle for wave 4, and then this is a very powerful pattern in Elliott Wave analysis. This is an ending diagonal. Exactly. And in an ending diagonal, you expect a sharp reversal. And exactly in gold, what we have last week's, it is this sharp reversal. I believe we completed wave A, and now we're working to correct this sharp upside movement for wave B. And my targets for gold, for the C wave, or we see if it will be some. I've seen some other people counting this movement as a complex correction, but I believe it is an impulsive movement. So if it's an impulsive movement, I'm expecting 3 waves to the upside and then reversal to the downside. But my target.
So it's up around the upper 1400 is your target. Yeah, 1480-ish. Okay.
Yeah, 1480s.
And then 1750.
But
yeah, and then new lows.
Yes.
Okay.
And if we check at the short-term time frame, I'm working with a complex correction, WXY. I believe this is a structural support of the market. If prices get to this area, it will be a buying opportunity for gold, targeting the 1380s. So we should be patient and waiting to see how this unfolds, this movement. Proportion means that we should wait a few weeks before wave B finishes.
Okay, give the bears the bad news on the stock market.
Okay, so similar with silver, I'm just skipping silver, and because silver usually follows gold. Okay, I'm starting with the Euro Stoxx 50.
Okay.
I'm working on a bearish scenario, and I think that the markets, and especially Europe, over the coming months, we should see bearishness in this market, despite this rally we have the last few weeks. I'm working on 1, 2, because I'm counting 5 waves to the downside, another 5 waves for this smaller degree, 1 wave. So I'm counting 1 and 2. And I'm expecting to continue to the downside because.
Okay, so we know the European bourses, and China's been weaker than the U.S. The U.S. has been the strongest market. Is the U.S. market gonna correct if you're right about 2140 in the Euro stock?
Let me tell you my predictions about it. Here I have the NASDAQ 100.
Yeah.
What I'm seeing in NASDAQ, I'm seeing from this wave 4 back in August, August 2015, I'm counting 5 waves to the upside.
Okay.
And then from this top here, which was a historic new high, I'm counting 5 waves to the downside. So I think for NASDAQ, we should also be bearish. And although this movement is sharp, it comes at this level here. It's a Fibonacci level.
What a coincidence! 78.6 again, huh?
Again, yes.
Okay,
again,
and
exactly.
the S&P has 88.6 or higher, doesn't it? So the S&P and Dow will they hold February lows with NASDAQ?
Yes, it's a little different, but I think most different is the Dow Jones. So the Dow Jones didn't score a new low here. So this is last August.
Yeah.
We can count this different ways. One count is the one I'm showing here, which is a contracting triangle. 3 waves for wave A, 3 waves for wave B, 3 waves for wave C. We're about to complete 3 waves for wave D. If we exceed the top of wave B, this line can be horizontal, and then the triangle is called the barrier triangle. So it can be at this level here, but if it exceeds this level here, then we have invalidation of the contracting triangle. So if prices reverse from here, we should expect 3 waves to the downside to complete wave 4, then a new historic high. But in Elliott Wave, as we said earlier, triangles carry a very important message. And the message is that the movement following the contracting triangle is the final movement to the larger trend. So the larger trend for the last years is to the upside. So after this move from the triangle is completed, I'm expecting a large decline in Dow Jones.
Okay, Evan, and the S&P, same thing.
Yeah, same thing. Another bearish count for Dow Jones is this one. I believe if we can count this as a 5 wave to the downside, Then we have 3 waves to the upside, 3 waves to the downside, and then 5 waves to the upside. So we're working with this 5 wave to complete this 5 wave, but we should stay below this historic high.
Okay, got it.
Although it is not following a Fibonacci level here, I am a little skeptic about this count.
Okay.
And finally, I want to close with a market that maybe it's not interesting to most people. It is the Greek market, the Greek stock market. I have here the last more than 20 years fluctuations of the Greek market. And what I'm seeing a 3 waves move to the downside from 1999, which topped here at 6,400 units. We have 5 waves for wave A, 3 waves for wave B, and clearly 5 waves, 1, 2 red, 3 red, 4 red. We're working now for the final 5th wave, which will close this cycle, this bearish cycle. And as I think it seems crazy to believe that the Greek market will score a new high over the next decade, I think this is the power of the wave principle, of Elliott Wave principle. You can anticipate the trends, the change in the trend, and since this change in trend will be an impulsive one, we should expect a new historic high. Despite that everything is very pessimistic in Greece, the economy is not doing good, it's not improving. But I think in 2016 or maximum in 2017, we will bottom in the Greek market, and then slowly we'll start going to the upside.
What a great presentation!
Also in the daily chart, I'm working with this final impulsive move to the downside. Clearly 1, 2, 3, 4, working with an expanding ending diagonal to complete this nice channel pattern, impulsive for the final movement.
Okay, what a great presentation. I have one question from the community. Do you use E-Wave for analysis, or do you also trade off of it?
What do you mean E-Wave?
Elliott Wave. Do you use Elliott Wave for making your forecasts? Or I figured your answer was yes, of course you trade off.
Of course it is yes. Everything I'm basing my trading in Elliott Wave, and one of the advantages of Elliott Wave it is that it can provide you with specific points that invalidate your pattern, and then it provides with specific targets. If, for example, wave 3 is the longest wave, then we should expect that wave 5 should be equal with wave 1. So we know exactly where to expect the market to top if we're following any impulsive wave.
This was one of the best presentations on E-Wave instruments that I've seen in a long time, John. Thank you so much for bringing so many views for us to consider in our longer range trading plans. So many different instruments that you presented. Really, congratulations on your journey as a trader. I hope that pips rain down on you in 2016. Okay. Very nice to meet you, John, and I'd like to call you my trading warrior brother. How about that?
Yeah, okay. I'd like to thank you. It is a privilege for me to be with you. This is my first time. I hope to have the opportunity in the future to update my markets. You are doing a terrific job, and when I started, I was always watching your videos, and now I'm I learn a lot, but because I focused on the Elliott Wave analysis, now I'm watching all in Elliott Wave analysis sources.
Yes.
But it is a great pleasure for me to be with you. You are doing a great job, and for most traders, what works better for each individual should stay with it. If it is Elliott Waves, it is Elliott Waves. If it is something else, and it is profitable, of course they should follow it. But for me, it is, I'm using the Fibonacci ratios, the golden ratio in my research life. So I think also analyzing the market is another kind of research. It is a research to forecast the next movement of the market. That's how I'm approaching the markets.
Everyone thank John Toumpoulis from @2bull_finance. The website is www.ElliottWaveTiger or EWTigerJohn.com.
Yes.
Is that correct?
www.ElliottWaveTiger.com. Yes.
All right, Tiger. Well, this lion is signing off now. Great to talk to you about the jungle, which is the trading world.
Thank you very much.
I'll leave you with this.
Okay.
All right, buddy.
Okay, buddy. Thank you very much.